Alright, so let's talk about how to use delta in options trading like a pro. You see, many people find these Greeks like delta to be one of the more confusing concepts when learning about options. However, as you will see in just a moment, it's important to understand delta if you want to make successful trades. And in this video, I will explain delta in detail and show exactly how to use it to your advantage. So specifically, today we'll talk about what is delta? We'll talk about understanding delta. We'll talk about delta, and this is a super cool feature, the probability ITM feature. And you might know about this, you might not, and you don't want to miss this. And then I'll show you how I use delta to apply it to decision making, specifically when trading options with the PowerX strategy and the wheel strategy. So we'll take a look at many examples here. But let's first talk about what is the delta. So first of all, the delta ranges for calls from 0 to 1 and basically measures how much does the price of an option change if the stock changes by $1. So as an example, if we have a delta of 0.6 for an option, it means that the option goes up or down 60 cents for each dollar that the underlying moves. And the underlying can be a stock, can be an ETF. You get the idea here, right? Let's just make this complete and say moves. Now for puts, this is where it goes from -1 to 0. It's the same. How much does it rise or fall, the price of an option, if the underlying moves by $1? Just long story short, with the delta of 1, it means that the price of the option moves $1 for each dollar that the underlying moves. So you get the idea, right? So let's actually take a look at an example. We want to take a look at an options chain here, and we want to take a look at Apple. So here we have an option chain as Apple. I'll zoom in. So as you can see right now, Apple is trading at 174.26. And on the left-hand side, we have calls. On the right-hand side, we have puts. Now, let's say that we are buying a call that is at the money. So let's say at 175. Let me zoom in a little bit so that we can see it better. Right here, now you see that the delta for the 175 here is 0.468. So this means for every dollar that Apple moves, the price of this option moves around 47 cents. So right now this option is trading at, you see the last traded here is 78 cents. So if Apple would move from 174.12 to 175.12, we can expect this option to move up by 47 cents, so to around $1.20 something. You get the idea here. For puts, it is the same way. So if you're looking at the 175 put, and we're looking at the delta, it has a delta here of negative minus 0.532. So this means that if Apple moves down by $1, it means that here the option will increase in price from right now $1.88 to then by 53 cents. So all of this is cool and handy and dandy, and you might wonder, why do I need this? Why does this really matter? Well, there's another use of delta that not many traders know about. And this is what I said here as we are heading back over here. It is the probability ITM feature. So let's talk about this. So not only does the delta tell you how much the price of an option will change when the stock price moves by $1, it also tells you the probability of the option that you're looking at of being in the money. What? So it shows you the probability of the option being ITM, in the money. So let me just show you a really cool example. So let's take a look at the charts. Let's go to a daily chart. Let's take a look at Apple. Let's just say that you are bullish on Apple and you're wondering, is it possible for Apple to move up to 185? Let's just put a horizontal line here. And you want to know, what is the probability that Apple moves to 185? Well, this, as you know, options have certain expiration dates. Let's just take a look at the expiration date of, let's say, next week. So now we want to see what is the delta of the 185 call option. And you see the delta of the 185 call option for next week. So this is where we have probably 8 days to expiration. you see that this is 0.061. And what does this mean? It means that the probability that Apple will move up there and that this option is in the money, meaning that Apple moves above 185, is 6.1%. What do you think about that? This is where you can say, okay, let's just actually see if we can put some text in there. So probability of Apple moving above 185 in 1 week is, as you have seen, 6.1%. And we correct this to moving. Now let's see, what is the probability if you give Apple 2 weeks? So tomorrow in 2 weeks to expiration. Let's take a look at this. This is where right now we will go to next week's expiration and we're looking at the 185 and we see that the probability, the delta, went up to 13.9, 1.39. So it means that there's a 14% probability that within 2 weeks, Apple is moving above 185. What do you think about this? Is this cool? So let's also take a look at the other extreme here. Let's say we want to know how likely is it for Apple to move below 155 within the next 2 weeks. This is where you see the probabilities here. We are looking at 155 and now we need to take a look at the put. Right, and we're looking at the delta and the probability is 0.44. This means 4.4%. So let's take a look at this. And this means that the probability of Apple moving below 155 in 2 weeks, it's only 4.4%. Keep in mind that this delta changes all the time. As the stock moves, you will see it on your option chain that this delta changes every few minutes. It really depends on your broker. Some brokers calculating it in real time. Most brokers are calculating it every few minutes, which is absolutely fine. But this way you have a probability of how likely is it for Apple to go up or to stay in between this, because you can now calculate the probabilities, right? So here we had it for 2 weeks. It was around 14%. So you remember, it was around 13.9, let's just say 14%. If we are looking at this, then we know that the probabilities of moving above is 14%, below it's 4.4%. So this means the probability of Apple being in this range for the next 2 weeks, as of today, is 80%, right? You get the idea. I think that this is super cool, and you see very, very few traders know about this. So now the next question is, if you're going back here to our handy dandy notepad, is how do you use this to your example? How do you use this for your decision making? Let's just keep it simple. Generally, here's the idea. When you're buying options, obviously you want the option to end up in the money. So, because otherwise it expires worthless. Now, on the other hand, when selling options and you're collecting premium, right, then you want the option not to end up in the money, because this way it will just expire worthless and you keep the premium. You now get the idea of how I like to use it. So, for example, the delta when buying options, I like to see it at least 0.5, 0.45, something like this. And this is when I'm using the PowerX strategy. So let me show you a very specific trade that we did today, or yesterday actually. Let me quickly log in here to show you the trade that we took, and we're going to the PowerX Analyzer. Now, this is a trade that I took yesterday. I actually traded the stock. So this is IRM, Iron Mountain. I entered at 46.35. Here is my first profit target. This is my second profit target. And here's my stop loss. So as you can see today, the stock is just slightly down, but we're still trading around our entry price. Now, instead of buying the stock outright, you could actually buy an option. And this is what we are looking at. So for example, for the quick trades, we have two possibilities. We can trade an at the money option or an in the money option. Now, if you have PowerX Optimizer, you might have seen this little show options Greeks here. And this little option Greeks shows you actually the delta of these two options. This means if you are buying 5 ATM options here, that with every dollar that the stock, IRM stock, moves higher, the option is moving higher by 41 cents approximately. And this is how we can calculate how much the option will be worth when the stock hits the profit target or when the stock hits the stop loss. So you see, we also have another possibility of buying the ITM option, and here it has a delta of 61%. So for every dollar that the stock moves higher, the option makes 60%. Now also, how likely is it that the stock will stay above 45? Well, that is a 61% probability as of today. You get the idea. So this is why when buying options, we want to use a delta of around 0.5. You see, I'm willing to go as low as 0.4 here. You get the idea. On the other hand, let's talk about how to use this when trading the wheel. So the delta, when selling options, this is where you want to go for a low delta, because the idea is that you have a low probability of this option being in the money, because this means that now you would have to buy the stock. So this is where it makes sense to look for something that is 0.2 or less, because this means a 20% probability of being in the money, which on the other hand obviously means an 80% probability of expiring worthless. And this is what we look for the wheel strategy. So let's see if we can jump to the markets right now to find a live example here. So Dick's Sporting Goods PowerX Optimizer suggests us a strike price of 104. Not ideal. This is why I didn't flag it as green, why I flagged it here as possible. I would like to see a strike price of closer to 100, to our lowest low calculator, but you already get the idea. So if we would sell this today, and it has an expiration of February 11th, so based on today's date, that is 8 days to expiration. So it means that in order to get in the money, this stock could drop another 7%. But this is where it's kind of useless to know, okay, so what? It drops another 7%. You see, if you go for another one, MU, for example, yeah, it can also drop 7-8%. Let's see, UIL, that can drop 7%. Okay, so here are the examples. Let's maybe take a look at WIN. This could drop 9%. But here's what's more important, right? I mean, this is where we look at the delta. And the delta, as you can see, is 0.13. What does it mean? It means that the probability as of today that DKS will close below 104 in the next 2 weeks is only 13%. So this means that you have an 87% probability of this option expiring worthless. Now, again, keep in mind what I just told you. This is subject to change every single day. So as the stock price gets closer to the strike price, the probability might be higher. But it's one of the things that some people like to keep an eye on when trading options. So this is where we go back to the practical applications, how to use it. This is where some people use delta to determine when do they roll. If you want to avoid assignment and you want to roll an option, this is where you could look at delta. And you could, for example, say, as an example, if the delta is bigger than 0.3, you consider rolling an option to avoid assignment. And you could say there's one possible strategy, and you could say if the delta is still below 0.3, you don't do anything. So again, full disclosure, this is not what I'm doing because I like to get assigned according to the wheel strategy. But as you see, when looking for options here to enter, you will often see whether we're looking here at DKS or we are looking at UAL, where the delta is 0.14, or we are looking at WIN, where the delta is 0.13 or 0.15. I like to see it here below 0.2. As you can see, delta is really, really fascinating if you know what it means. And most people just know that delta is actually telling you the price, how much an option move for each dollar that the stock moves. But this probability ITM feature is, I think, something very cool when it comes to delta in options that, I don't know, maybe you have known it, maybe you did not know this. If you didn't know this and you think that others should know about it, feel free to share this video and give it a like. I also have some other videos popping up that you might enjoy. So take a look at these and I'll see you in the next video.